And we have a new leader on the day. We have the Russell 2000 actually leading out of everything over the NQ, over the ES, and you can actually see the NQ reverse today. Is it the beginning of the end? No, I don't think so, but you are going to see rotation. And what would concern me more than anything is that you're seeing rotation right now at the beginning of the third quarter. And I think that that is staggering to note. And I'll tell you why. Let's take a look at the sector movement. As always, subscribe to the channel, click all notifications. 27.5% of you that watch these do not subscribe. Let's go. In front of you are 40 of the biggest sectors, and I put them in a chart, and that way you can kind of come back and look at them on different time frames and kind of see what's moving. And we can also look at them on different intervals. Now I'll get rid of the pre and the post for a second, right? So that we can really get in there. And let's get rid of the candlestick, and we'll make that a line. That's just the ES. And instead of putting the ES in there and getting the futures all goofy, we'll just drop the S&P in there. And what we're going to see when we look here is we're going to start seeing some of them lifting like block and then rolling over. But let's start dropping this down into a 1. And then let's look at July here and really get into this so that we can see how this is playing out. And what we'll do is let's go back to that July number. And I thought that this was super interesting. You can see steel at the time where it was up here, and then the XLP they're buying, IYR, XLRE, and you have a whole mix in here, the energy, financials, utilities. But what you don't really see is you don't see tech. Tech's all down here. So you are seeing that rotation. I find doing this super helpful, because it just shows me where all the players are. And it tells me exactly what they were doing. They were buying the smaller cap. They were buying the home builders. They were buying retail today. And I think we should spend our time get into why so that you'll understand tomorrow what's happening. Understand you just kicked off third quarter. It just kicked off. So definitely something to think about here as they rotate out of what I refer to as the VUG into the VTV. We might as well go over that. So in front of you is VUG, which is Vanguard Growth. Now, if I just did the simplest of things and hit VTV, that's going to give me value. And then I'm going to go to July right here. And I'm going to say, are they buying value or are they buying growth? And you're going to say, duh, and or hello. I don't need you for this. But now you know, value, they are buying and they are selling growth. Almost, up 1% of the day, down 1% of the day. It's not rocket science what they were doing. They were selling growth and they were buying value. Because there's some stocks out here, guys, that are trading at book value, and that not only are they trading at book value, they're trading cash flow positive at book value. And I think that that is really very important to get. So what I think is really interesting about this is I always use this as a equation, and I'll show you the equation so that you can just do it for yourself. You take VUG and you divide it by VTV, and then you're going to get this line. And here's that line right there. So what we're going to do is get rid of the red one for a sec. Then we're going to drop this down and we're going to turn that into a daily. Cool. Then what we're going to do is start looking at this and saying, okay, what does this do for us? Well, this does a couple things. It tells us right now that the growth is getting toppy again. And when you come through this area, and what you can do with this is just go all the way back, you'll note that this is pretty much the highest growth to value area that you've ever had on the market. Does that mean that you can't break it? No, of course you could. But it does mean like, hey, when you get into this band, you're kind of in no man's land. And so you want to just note that and say, okay, well, I've got to either break out of that band, or when I get in here, this is where it gets a little goofy. And you'll note, this is where the market came in and people started buying, more of the what? They started buying more of the value names, come out of that left head, right shoulder, breaks. And then what do? We start buying growth again right around when? April 24th, right? So now we're kind of topped out again in this level, and it does make a difference. But when you drive this down and start looking at this on like an hourly chart, you'll start to see what happened. Well, you've been bonking your head on this level for a period of time. If we drop it to a 15, then you can actually see it a little bit more, right? And then all of a sudden you're like, well, what happened? I'm glad you asked. We're going to get to it. But I think it's really important to get this. You always want things that are going to tell you what's going on. Like, you just don't want to tell it what's going on, right? So if I look at like VUG on a 4-hour and I see something like this, then I know that, yeah, we're probably going to come in on the value side or on the growth side and the value side, because you can see the divergence right here. And I use divergences. I always look at RSI in regards to relativism because I find it very helpful, or else I wouldn't do it. And you can see that divergence right here. And I definitely think it's something to pay attention to. But let's get into it. What exactly happened today? Well, we saw this big to small stock rotation. Wall Street traders drove out of tech megacaps and pushed stocks back from the brink of a bear market. So obviously we know that there was a huge move today in the market. Bond yields rose as an increase in job openings dampened speculation for Fed Reserve rate cuts. And we're going to get to that, the JOLTS jobs numbers in 1 second here. But that is true. We actually had some speech come out today that was very, I would say, surprisingly leaning towards rate cuts by Jerome Powell. I was actually surprised by it. But then right after, job openings just exploded, and we'll get to that. S&P barely moved after reaching all-time highs. That rotation beginning in July. Please understand why this happened. You have June 30th, and now you're right at that third quarter beginning. So people literally locked in their quarter. We went over this in the public pre-market as well. It's definitely a thing, and they definitely did that. So keep that in mind. It's certainly something that they tell you exactly where they're positioning themselves going forward, and it was real clear, those sectors, and we'll get to that. Momentum was unwinding at a rate not seen in more than 2 years, and we all saw that with how quickly they got out of these names. Russell 2000 outperforming NASDAQ. Most since April. Short-dated treasuries are more vulnerable to future Fed moves. Obviously, they were all over the place. Highest level of job openings since November, boosted primarily by leisure and hospitality, while layoffs have decreased. Fed policymakers are watching the labor market. And we have non-farm payrolls on Friday before we have that early holiday on Thursday. Jerome Powell reiterated a panel of central banks would likely have seen interest rate cuts. Trump had not expanded use of tariffs, another kick right there. But you always want to see what they're doing. So here we are, and we can see that this is CME Fed Watch. And what they do is they tell us exactly where people are positioning themselves or how people are positioning themselves. And we can see really clearly here that the current rate is at 425, 450. And you can see that the chances of it staying here are 78.8%. But it was 81% before today. I would actually say that if you saw this move after Powell spoke, it actually was even more skewed that way. After jobs, that jobs number was so strong, the exact opposite happened, and they just backed away. But after today, you were at 18%, and then you went to 21%. So no matter how you look at it today, even after, you're still at a 10% greater chance of a rate cut in July. It's something. It's not everything, it's something, but it's certainly set, and I think this is really important, it certainly set sectors on fire way more than it set other things on fire. And that's where the rotation came in, and we will discuss this in some detail tonight. But there were other parts that happened today as well. With the European Central Bank Symposium signal, most officials still expect to cut interest rates. He did reject speculation that July rate cuts off. They really pressed him on that. He said, I don't know that that's off. So they might be getting to him. And I also think that it was interesting that Besson today was the first time I heard the Treasury Secretary actually come out and say, yeah, he might be behind here. Now, whether he got pressure from Trump or not for this one big, beautiful bill, whatever, but those two actually talk, and it's very common knowledge that those two go to lunch and talk a lot. So I was surprised to see him actually say that. I was. So that maybe he got that out there because he knew Powell was going to say that. I mean, they're all pretty connected, actually. So there's a reason for that. Devil's in the details. Treasuries actually rose, which is kind of funny. Materials outperformed above their 200-day moving average, XLB, but solar. Senate approves tax and spending bill that scrapped a proposal excise tax on renewable products. So it scrapped a proposed excise tax. So they got rid of the tax, and because of that, we've seen RUN, SEDG, and Phase, and some of these other names actually surge higher. But we also the big sectors. Now, surprisingly, we got right to the top, and there was that pullback and rejection, but all we did was just get right to our level and then pull back, hit, and now we're gonna have to see how this plays out. Now, for me, I think this is pretty simple to see how this is gonna go. Up, over, down. Are we gonna hold, are we not? You know, I like NVDA a lot. I mean, it's not really a rocket science. I've been watching these. I do have to start watching this stuff, though. When you get up to like this 82 and then you cross to the downside, you're not really looking at like the best spot to start buying it after you just went from, this level of like 87 up to 153. I mean, it is a huge move from the bottom to the top. I mean, it is an 80% move on a $1 trillion company. I do think long term you're going to keep grinding, but it does seem to me that they're going to start looking to put on the brakes a little bit here. And usually when you get up here on these 4-hour RSIs, can you grind higher? Yeah. I mean, this negative divergence went on for some time. If you got out at 139, you missed the ability to get out, at 152. So you have to, they are what they are. I mean, it's a tool, it's not the tool. But, the question is, do you want to get out then, or do you want to put yourself in a position where you're going to get whacked? That's really the issue with this. They're just tools. What you do with them is obviously up to you. This obviously was a little disheartening. What you really don't want to see with these semi-names is have them start cracking like hard. Today was just really, okay, we did see rotation, but if we look at the volume here, and I think we should. Yeah, it's up, but it's nowhere near what you were on Friday. Yes, it is up. Yes, they are selling. And I think that they're just rotating because you're going into that third quarter. And it wasn't just NVIDIA, it was across the board. You saw it with AMD, and AMD, now you've got that, what I refer to as the hanging Chad kind of pattern here. And it's not really the best. Usually with these kinds of patterns, what you like to do is just watch and see how ugly it gets. Usually there's some kind of rally back up, and then you're going to get a real sense of whether or not that's going to roll over. That's when you get a true sense of that and what you're going to see there. And I'm not sure you're there yet. Micron did break below that 12, and before we get into some of the hotter sectors, I just think it's important to note that that did happen. The SOX is still green on the day, and you still are up over the open, which means you had net buyers. And if you take a look here at the volume side, you had huge volume today. So it was broad-based buying in certain sectors. Like look at Texas Instruments, it's up on the day. Not a lot of people were looking at those kinds of names. The analog names were up on the day. ADI, I think there's something to be said about that. I do think it's something to consider. The high flyers are the ones that came in, the Taiwan Semi, those names, the AVGO, like they're the ones that are coming in. And I think they're the ones that are a little at risk here. Now, what I didn't really like in financials was to watch the reversal in Hood today. And people will say, well, that's not really a reversal. Yeah, it is. So when you have that kind of volume and you take out a high and you close below the previous close, that's a reversal. It's like clinically the definition of a reversal. You do not want to take out a high and close below the previous close. You just don't want to do it. And you can actually see that it should be marked, actually. That's marking the high of that bar. What I want really there is the close. Let's see if we can get down to that 93.63, because we were talking about this in the room when it happened. And what I said was if it breaks, that's it. You're going to see the panic come in because that's really the area of defense. And once it happened, that was it. The floodgates just opened. It was literally like one bar. As soon as it broke, it was right here, and you were down pretty easily, tried to rally, and then that was just the end of it, and then you just fell apart. And that's usually what happens here. Now, you got back to it today, and then you just rejected it again. What I tend to do on these kinds of bars is two things. The easiest thing to do, number one, is drop a pin and a VWAP right on the peak of that move. Number two, it's still the initial bar. So I always take the initial bar as well, and I put a VWAP there. And then I just see which one are you really respecting and which one you're running buckshot over. Well, my peak so far, you're running buckshot. So I take off my peak and I leave that, and you can see 1, 2, 1, 2, 3, 4. So peak VWAP from the day seems like it's going to be the issue. And so you just might want to watch that level tomorrow and see where it goes from there. I would expect volume to be light, but let's get into some of these sectors because I do think it's really important. If you take a look at XLF, and how this looks today, you're breaking out. And if you go and take a look at these names like JP Morgan after hours coming out and saying, by the way, based upon the news today and what's been going on, we're going to increase our dividend to a buyback. So all his talk here where the stock actually plummets and he's talking about, our stock's super, I think it was this day, our stock's super expensive. Wasn't that the day? Super expensive. It was one of these days he came out and said, it's super expensive. I certainly wouldn't buy our stock. And now he's buying it 10% higher. So, do what I say, not what I do. And he's just out there in the open market buying it, increasing the dividend. And you're seeing these names a lot. Like they're hanging in here really well. I own both of these. I think they're doing very well. I think XLF looks fantastic. But you're spreading out. You're starting to see movement in Citigroup, which is pretty rare. But when they increase the ability of them to lend, Citigroup has real leverage. So does Wells Fargo. They've been in the doghouse for some time. So that leverage goes into the market, and that's exactly what you're seeing. That you're seeing the drive of that leverage, and I think that's something that probably does continue. So we'll see how that goes. But you did spread. You did spread the wealth today. You have the KRE, which absolutely exploded out on the fact that rate cuts are coming sooner, not later. Despite the numbers that we went over in that CME Fed tool, a lot of people didn't really think that was going to happen. You have the 3X ETF, DPST, just disclosure, I own this, something that we bought when we saw the news. It actually just led and just kept going, and then eventually just got involved. And you're seeing that a lot in these kinds of sectors. Like look at ITB today and the breakout there. These are going to be the hot sectors because they're so beaten down. People don't realize that some of these companies are trading at or under book value and they're cash flow positive. We're so focused on tech, we don't really understand this space. And so we're not really focused on it. And so when you see things like ITB do that, people don't realize that it means that something like Nail moved, 10 points today at one point, 51, 52 to 63, 11-point day on a $50 stock. So you can see these suckers. They can move. Home Depot started moving. You see Lowe's. And then you're obviously going to see the other names too, like your lumber names. Like they're going to start ripping, and they're at a huge discount. So, and they're cash flow positive. If you're going to have more home building, you're going to need that. If you cut rates, home builders are going to go higher. It's not rocket science. It's literally the simplest trade out there, bar none. And then so is it with just want to go out there and take a look at how you're going to get all the lumber, right? It's going to be UNP. And I think CSX is still around, isn't it? CSX, there you go. So you can see these names and they just tend to do this. It's like one big trade. Once those rates come down, they need the lumber from Canada to the US. Who's the biggest lumber company? You can just connect the dots. Who has the biggest lumber inventories? It's Home Depot, Lowe's. All you're doing is connecting the dots. It's not rocket science. So if you go through this cycle, I went through this cycle, 4 or 5 times now? So it's real easy to connect them after 20 plus years. Anyway, now you have all those dots connected. The thing that people were trying to put their noodle around was like XRT and like, why is that breaking out over XLY? I really think it boiled down to more what Amazon did. You have rates coming down, but Amazon issued a statement that based upon their buying, they do not see pass through in the same way that they saw pass through to the customer. And this was a statement issued by the CEO. And he's equating it to 2 things. 1, the ability for them to work with their vendors, and 2, the ability for them to buy right. So there's kind of a dual nod there, but that led to names like Lulu lifting very, very heavily. And you can see that. I mean, it was absolutely excellent the way that lifted. And look at Nike coming out of that, trying to lift there. So you're starting to see more signs of that. This is the one that I own. Just disclosure, I own it, and it just acts fantastic. So it's crazy because I bought this in here. It was dropping. I was scaling it. Everyone's like, "Why are you buying this?" And the reason, I'll just tell everybody, it's trading at 8 times earnings. People don't really understand how cheap some of these names are, and they're acting like they're just going to go away or out of business. You have names like Harley, based upon what's happening, that's actually at one point this was under book value for Harley Davidson. And it's just, to me, it's absolutely crazy when you really think about it. Like, not every quarter was cash flow positive, and they did have some write-downs, but you have a company that literally, okay, we had one write-down, but we are cash flow positive and we're trading at book. Like, it's tangible book value. It's just crazy. So you're going to see that movement in the XRT now, and that might mean that you start seeing like the XLK be a little weaker. It's not a bad thing to see IWM lift, and you have those other side names like Tesla, and I think this is really important to get. Like, I tried 3 times today, and the third time it finally worked. Like, it finally worked exactly as it was supposed to work. And quite frankly, I just really should have, with the way the market is today and how light it is, and you have to wait for the speeches. And then really the key was, if you look at the market, like, when did you actually roll? Once you came out with that data, that data marked the high on everything. Whether they were there or not, if you look at Tesla or you look at NVDA, if you really go through it, like, nothing after that 10 o'clock number that was tech driven really went any higher than that 10 o'clock level. It all just kind of waited for the JOLTS jobs numbers to come out that were higher than expected. And then we just kind of fell apart. But Tesla, Elon, does he want to run a company, or does he want to start his own party? He's out here chastising people, saying, if you do this, I'll create a party and I'll throw billions behind it so that you don't get reelected. Okay, or you could sell cars and make robo-taxis, one or the other. But this presented a couple times here that I thought we were actually going to roll, and we didn't. And I will show this probably Wednesday or Saturday's video. I'm not going to show it tonight. I'm going to keep tonight short and sweet, because I think you just need to prep for tomorrow more than anything. I think that's really where you need to be. I would watch your ranges. I'm going to leave it at that. Here's what I do see. I see them getting out of what they were in, and I see them changing that. And I see them starting to, you watch these levels, and then you're kind of bonking around on them, trying to hold them. But I see them trying to hold these levels and failing. Now, you're up after hours. Whether you stay up or don't remains to be seen. But the guard that was there from, let's call it end of June on, like these rallies, they're all fading. And they're fading really hard, and they're fading really fast. When you look at these moves and go, well, you're down for 80 points, you're down $50. In a very short period of time, you need to pay attention to that. It's certainly telling us something. So let's watch tomorrow. We'll get more economic data. And then obviously the big data is non-farm payrolls. And I'll make sure we're prepped for that in tomorrow's video. That is it.